Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Federal Reserve policy plays a crucial role in shaping the financial landscape, impacting everything from inflation rates to interest rates. But how does it affect your investments? Understanding the Federal Reserve's policies and decisions is key to making informed investment choices. As an investor, keeping a pulse on the Federal Reserve's policy changes can help you anticipate market fluctuations and adjust your investment strategy accordingly. Whether it's a shift in interest rates or a new monetary policy announcement, being aware of these developments can give you a competitive edge in navigating the financial markets. In this video, we will delve into the intricacies of Federal Reserve policy and break down its implications for your investment portfolio. From analyzing the Federal Open Market Committee meetings to interpreting economic indicators, we will equip you with the knowledge and insights needed to make well-informed investment decisions in a dynamic market environment. Understanding the Federal Reserve policy. The Federal Reserve plays a pivotal role in shaping the United States economic landscape. By regulating monetary policy, the Federal Reserve aims to maintain stable prices, maximize employment, and moderate long-term interest rates. This proactive approach helps create a financial environment that fosters economic growth and stability. Role of the Federal Reserve. The primary objective of the Federal Reserve is to promote a healthy economy by controlling inflation, minimizing unemployment, and ensuring the stability of the financial system. Through its actions, the Federal Reserve strives to strike a balance that supports sustainable economic growth while keeping prices in check. Acting as the nation's central bank, the Federal Reserve carries out its duties independently but is subject to oversight from Congress. Tools of the Federal Reserve. The Federal Reserve wields a variety of tools to influence economic conditions. One key instrument is the federal funds rate, which determines the interest rate at which banks lend reserves to each other overnight. By adjusting this rate, the Federal Reserve can stimulate or slow down economic activity. Open market operations involve the buying and selling of government securities to control the money supply. Additionally, the Federal Reserve can adjust reserve requirements for banks, impacting the amount of funds they can lend. Through these mechanisms, the Federal Reserve steers the economy towards its targets of stable prices and full employment. Impact of Federal Reserve policy on investments. Understanding how Federal Reserve policy influences investments is crucial for investors seeking to navigate the financial markets effectively. Interest rates and investments. When the Federal Reserve adjusts interest rates, it has a ripple effect on investments across various sectors. For instance, higher interest rates can lead to decreased consumer spending and reduced borrowing, impacting industries like real estate and automotive sectors. Conversely, lower interest rates can stimulate economic growth, benefiting sectors like housing and technology. Investors must be vigilant about interest rate changes as they can significantly influence the performance of their investment portfolios. Stock market reactions. The stock market tends to react swiftly to Federal Reserve policy decisions and announcements. Positive policies, such as lowering interest rates, often fuel optimism among investors, leading to a surge in stock prices. Conversely, tightening monetary policies may trigger market corrections or downturns. Investors should stay informed about Federal Reserve meetings and statements to anticipate potential market movements and adjust their investment strategies accordingly. Bond market dynamics. Federal Reserve actions play a pivotal role in shaping the bond market landscape. Changes in interest rates directly impact bond prices and yields. When interest rates rise, bond prices typically decrease, affecting investors holding bonds. Conversely, falling interest rates can boost bond prices, presenting opportunities for investors. Understanding the dynamics between Federal Reserve policies and the bond market is crucial for crafting resilient investment strategies that align with market trends and economic conditions. Strategies for investors in response to Federal Reserve policies. In the dynamic world of investments, staying ahead of the game means being prepared to navigate the impact of Federal Reserve policies on your portfolio. Here are some strategies for investors to consider in response to Federal Reserve policies. Diversification techniques. Diversification is key to spreading risk and protecting your investments from the potential fluctuations caused by changes in Federal Reserve policies. Consider allocating your investments across various asset classes such as stocks, bonds, real estate, and commodities. By diversifying, you can potentially reduce the impact of any single policy change on your overall investment portfolio. Additionally, within each asset class, aim to further diversify by selecting a mix of investments that have low correlation with each other. This can help cushion your portfolio from sharp declines in specific sectors that may be affected by Federal Reserve decisions. Long-term investment approaches. When it comes to navigating the waters of Federal Reserve policies, adopting a long-term investment approach can be beneficial. Rather than trying to time the market based on short-term policy changes, focus on the fundamental strength of your investments and their long-term growth potential. Consider investing in companies with solid track records, robust financials, and a history of weathering economic storms. This approach can help you ride out any short-term market volatility resulting from Federal Reserve policy shifts and position your portfolio for steady long-term growth. Role of professional advice. Seeking guidance from financial advisors can be invaluable when it comes to aligning your investment strategy with Federal Reserve policies. Financial professionals have the expertise and knowledge to help you make informed decisions based on your risk tolerance, financial goals, and the current policy landscape. By consulting with a financial advisor, you can gain insights into how Federal Reserve policies may impact your investments and receive personalized recommendations tailored to your specific financial situation. This can help you navigate market uncertainties with confidence and ensure that your investment strategy remains aligned with your long-term objectives. Recent trends and future outlook. The Federal Reserve's recent decisions play a crucial role in shaping the investment landscape. Understanding these trends can help investors navigate the ever-changing financial markets effectively. Recent Federal Reserve decisions. In recent times, the Federal Reserve has implemented various policies to support economic recovery. One key decision was the commitment to keeping interest rates low to stimulate borrowing and spending. This move aimed to boost economic growth and stabilize financial markets amidst uncertainty. Additionally, the Federal Reserve initiated asset purchases to inject liquidity into the economy. By buying government securities and mortgage-backed securities, the central bank aimed to lower long-term interest rates and support lending activities. These actions have provided a lifeline for businesses and individuals during challenging times. Predictions and speculations. Looking ahead, investors are keen on anticipating the Federal Reserve's future actions and their impact on investments. Speculation suggests that the Fed might gradually taper its asset purchase programs as the economy shows signs of recovery. This could lead to a rise in long-term interest rates, impacting bond prices and equity valuations. Moreover, discussions around future interest rate hikes have stirred debates among investors. Understanding the Federal Reserve's stance on inflation and employment dynamics is crucial for adjusting investment strategies accordingly. Diversifying portfolios, focusing on quality assets, and staying informed about macroeconomic indicators are some ways investors can prepare for potential shifts in Federal Reserve policies. Finally, understanding how Federal Reserve policy impacts your investments is key to making informed financial decisions. By keeping an eye on interest rates, inflation trends, and overall economic indicators influenced by the Fed, you can position your investment portfolio for success. Remember to stay informed, adapt to changes, and seek guidance from financial experts when needed. Your financial future is in your hands, so empower yourself with knowledge and proactive decision-making. Happy investing! Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.